we have to first go back to how everyday business actually worked in India before 2017. For instance, imagine a trader in Delhi sending a truckload of goods to Mumbai. On paper, it looks like a routine commercial transaction. But even before that truck left the warehouse, excise duty had already been paid at the manufacturing stage. When the sale took place, VAT was applied under state rules. The moment those goods crossed state borders, central sales tax came into play without any input credit. And as the truck moved across states, it ran into entry taxes, OCTRA checkpoints, paperwork inspections and delays. So while things appeared organized on paper, on the ground, the tax system felt anything but that. This wasn't an isolated example, but the daily reality of Indian commerce. Every supply chain decision, where to manufacture, where to warehouse, how far to transport, was shaped not by efficiency or demand, but by tax avoidance. Businesses built warehouses near state borders not because it made logistic sense, but because crossing borders was expensive, uncertain and slow. Tax planning often mattered more than productivity. Before GST, India didn't operate under a single indirect tax framework. Instead, it functioned through a layered arrangement of central taxes, state taxes and local levies, all existing at the same time, often overlapping and sometimes even contradicting each other. For a trader, a manufacturer or even a small service provider, tax compliance was a constant exercise in adjustment. The constitution itself divided taxing powers in a very rigid way. The center could tax goods but only up to manufacturing, while states could tax sale and purchase. Services were taxed exclusively by the center. This division might have worked in an earlier economy, but as India modernized and businesses began offering bundled products and services, this clear separation slowly collapsed. And that's where confusion crept in. Was packaged software a good or a service? Was restaurant food about the product or the service element? Was construction mostly material or mostly labor? These weren't academic or rhetorical questions. They turned into legal disputes, delayed assessments, and years of litigation. Businesses were often caught in the middle, paying first and arguing later, without clarity on who actually had the right to tax that transaction. Courts became the final arbiters of tax classification. Different states took different views. The same transaction could be taxed differently depending on geography. Certainty disappeared and with it, ease of doing business. But the bigger burden came from something far more visible, the cascading effect of taxes. A manufacturer paid excise duty at the production stage. That excise duty became part of the cost. When the product was sold, VAT was applied on the top of that inflated value. If the goods crossed state borders, central sales tax was added without any input credit. By the time the product reached the consumer, multiple taxes had already been embedded into its price, quietly compounding at every stage. So what the consumer finally paid wasn't just the price of the product, but the price of inefficiency. This invisible tax on tax distorted prices across sectors, from everyday essentials to manufactured goods. Consumers rarely saw it on bills, but they paid for it every time they shopped. Inflation wasn't always about demand or supply. It was often about structural inefficiency. Moreover, interstate trade made things even more complicated. Each state followed its own VAT rates, its own procedures, and its own compliance rules. Entry tax and OCTRA checkpoints slowed down movements of goods, increased logistics costs, and broke supply chains. India, in effect, functioned like multiple small markets stitched together, rather than a single economic union. Trucks in India spend more time waiting at state borders than actually moving. Logistics costs were significantly higher than global benchmarks. Time, fuel, and productivity were lost not because of distance, but because of fragmentation. As a result, small traders and MSMEs were hit the hardest. Many of them were suddenly expected to deal with multiple departments, different filing systems, and frequent audits, even though they lacked the resources or digital readiness to do so. This complexity pushed several businesses into informality, encouraging tax evasion rather than compliance. Over time, it became clear that the system was overlapping, inefficient, and outdated, and it no longer matched the scale of ambition of India's economy. This is why GST was conceived as a structural correction and not just as a policy tweak. When GST was implemented on 1st July 2017, it brought goods and services under a single tax framework, removed tax on tax through input credits, and replaced fragmented state markets with a destination-based national system. Equally important was the creation of the GST Council, where the centre and states worked together through consensus, reflecting cooperative federalism in practice. The rollout had challenges, but the framework was built to evolve, and corrections were made over time. Since then, GST has continued to evolve. Compliance became digital, refunds faster, and the tax base steadily expanded. As data viability improved and compliance stabilized, the focus shifted from fixing the system to refining it. And now, with the next-gen GST reforms of 2025, the focus has shifted even more clearly towards simplicity and affordability. On the night before the launch of the next-gen GST reforms, PM Modi outlined the intent behind the next phase.
ये रिफॉर्म भारत की ग्रोथ स्टोरी को एक्सेलरेट करेंगे, कारोबार को और आसान बनाएंगे, निवेश को और आकर्षक बनाएंगे और हर राज्य को विकास की दौड़ में बराबरी का साथी बनाएंगे.
The move to a two-slab structure of 5% and 18%, reduction of rates on essentials, relief for middle-class consumption, lower input costs for farmers and MSMEs, and continued higher taxation on luxury and sin goods reflects a conscious attempt to correct past inefficiencies without sacrificing revenue stability. Seen together, the shift from the pre-GST era to where India stands today did not happen automatically, nor was it simply a matter of replacing one tax with another. It requires a clear political decision to confront decades of fragmentation, to bring states to the same table, and to push through a reform that many had discussed but few were willing to execute. Under PM Modi's leadership, GST was taken out of policy files and translated into on-ground change, despite its scale, complexity, and inevitable resistance that comes with structural reform.